All right, hey there. Good morning, everybody. It's a few minutes after 11 a.m. Central Standard Time here on Friday, the 28th of January, 2022. I'm Chris Franks with Texas West Capital, coming to you live from Bernie, Texas, just north of San Antonio. Hopefully, you guys are doing well. If it's your first time, hey, listen, I'm from Texas, so uh, people say I have an accent, and if you're from out of the country, that may be hopefully not too difficult to understand. I also tend to speak a bit faster when I get a bit excitable. So, welcome to what we're doing here. Hopefully, that won't be an issue. How's everybody doing today? We all right? Oh, man, the Fed this week. Doing what the Fed does, man. I told you guys, we had to watch what was coming with those the FOMC minutes. The hawkishness from the Fed just continues, and so the markets did what the markets do. The dollar gained a lot of strength on that. I had some questions, guys, real quick. I had some questions about when the release happened and why price was moving all up and down and, pretty wildly the swings in that area. It's just because you do have positional traders who tend to try to anticipate the market. Now, why would we do that? That's just silly, right? I talk to you guys all the time about that. Anticipating is gambling. Waiting for confirmations is speculation, right? And if you want to have any length of time as a trader, you absolutely have to recognize the difference between the two and the importance of being a speculator versus being a gambler. If you are a gambler in the markets, if you're always trying to anticipate what price is going to do rather than allowing price to tell you, to gradually tell you what it's going to do, and the more it tells you, the closer, the less profit you're going to get, but the less risk you're going to take on, right? That's what those confirmations are all about. But I don't know any trader, man. I know a lot that have made it for any length of time as a trader by gambling, by anticipating. It just doesn't happen. Every once in a while, you might get it right, but most of the times you're going to get it wrong, and so you're usually out. And not happy. So anyway, you have positional traders and others who try to play the news. I would never support the idea of trading news events as they happen. There's just too much that can go up. Right, you might have the right direction, but it might go in the other direction too far and knock you out before you get a chance to enjoy it. I always suggest that traders just kind of wait till the news event's over with and things die down. Usually within a few hours after the news event, you'll have a direction for the trade. In this case, it did have the pop-up strength for the euro, and then it followed through down lower for the dollar there, right? I wrote for the euro to go lower, the dollar to go higher. That ended up being the direction, which makes sense because of the hawkishness. So anyway, just some kind of thoughts on that, guys. Who's here already? Hey, what's up, man? I've got the baggies here. Claudio, Blaze, Keith, Mark, Shinar, what's going on, guys? Data's here, 51 ETH. Man, so great to see you guys. Bill Stoko, what's up, buddy? Chan Man, what's up, man? Good time. I don't think I've seen you in a while, or at least haven't seen you say anything in a while. Hey, some Risk, another one of my favorite people. Man, so many of my favorite people joining. I love that. I love it. Anyway, so we're going to talk about that a bit. We're going to talk about Biden. Biden's got this executive order he's expected to sign probably in the next month or so. It's something I've talked to you guys about for the last few years about how we were going into probably getting a lot more regulation finally in the next bull market, which is this one that we've been in. So if you guys followed me back in 2018, 19, everything that I talked about back then happening this bull cycle is happened. Central banks talking about their potential digital currencies. With China actually jumping off on its own already. Fed's still kind of hemming and hawing a bit about it. Regulation. I told you that was coming because I told you that the big money was coming. The bigger pockets, bigger companies, bigger funds, maybe stuff like that, getting more and more involved, a lot more involved this time around. But then that would coincide with the regulation, because the more regulation you get, the easier it is for that big money, especially if it's a fund of some sort, to get involved. They have certain legal requirements that they need to meet, and certain legal requirements, that force them, to be responsible at a certain level, really responsible for what they're doing. And they can't many times meet that if there's, unclear regulatory guidance on what's going on there. So that's why you had people like Coinbase, like what's his name over there, Coinbase, probably within, I think it was within the last year here, where he had all that issue with the federal agencies, and he penned that I think it was the New York Times editorial opinion. Where he was talking about the same things and talking about the lack of regulatory compliance or regulatory clarity. So, you get these businesses like Coinbase and others who are coming in, and they really, the crypto is so fast moving, everything, we've developed this whole DeFi thing in such a short amount of time, right? But it's hard to do that and to build, because as you build, you're taking on investors, right? And those investors have expectations. And so it's hard to keep those expectations, if there's not a real good, clear regulatory guidance as far as what you're doing, which means, either, they start taking out their investment, or you have trouble getting new investors in. It can cramp the whole thing you're doing. You might have a plan that you're going to do A, and this lack of, based on what kind of guidance you do have. And then all of a sudden, there's another agency pushing its weight around a bit, and, all of a sudden you can't do A. So now you have to do B, but investors were coming in looking at A. It's so much, guys. But this is the stuff we needed, for this to become, be taken serious. And I know many people spout off at the mouth. They really don't understand. They're like, oh, government, they're just doing this and that, and we don't need them, and they don't need to control crypto, and all this silliness. But the reality of it is, we live in a country that has a government, and in order for that government to function as it generally is expected to, it has to have control. It has to have some bit of control over the major stuff that's going on. And so, some people were, when Biden came out with this talk about, or when they talked about this idea that Biden was going to come out and sign this executive order, and one of the reasons they gave was national security. And a lot of, people on crypto Twitter and whatnot, national security, what are you talking about? So we'll talk about that here in a bit. But there is a serious national security part to all this as well. And some of national security has to also do with the sovereign's ability to maintain the monetary supply, the interactions, everything's going on. Because if they can't do that, then the government's basically held at ransom, and it can't do the things that it needs to do and the things that it wants to do. I'm not saying whether it's good or bad, the things that it wants to do, but there are things that we depend on the government to do. Now, I'm not a big fan of government, and I think less government the better, but, if it's going to be there, there's things that are going to happen. And, it can't always do that when there's other things coming at it. So anyway, like I said, we'll talk about that. Oh, man. So much going on, guys. You guys should be excited. You're living in such a crazy time right now. Pandemic for 2 years. We've got this huge credit excess going on. And it looks like it may finally be tilting over there. The markets are down, third straight day here. Kathy Woods, the darling of tech, is really sucking wind right now, right? Her ARK ETF there, really not doing well. Tesla biting the dust. MicroStrategy biting the dust. There's a lot going on, but especially tech sector, and that's something we had talked about previously, was that as we got to the top, the tech sector was what was keeping everything up. So when it came down, everything else was going to have trouble staying up without it. So we're kind of seeing all that as well. So who all's here? Got anybody else joining in already? What else we got here? John Smith checking in from Houston, H-Town. What's up, man? I may have to buy some property over there. Well, I don't know, maybe Spring or Magnolia or something. Get some land out there. XRP, what's up, buddy? Let me see here. Esmer says, Buenos dias from your friendly Tex Rican. Oh, what else we got? We got Silvio. We got idiots coming in, wasting our time. Let's see here. Let me see here. This was the one. Let me see here. Vasily. That was the last part of the name. I hope I'm getting that right. I hope that's just itself. I apologize if I'm really screwing it up. But good to see you though, man. He says we're on track with the WTI prediction. All right, Hank. Let's see. Hank's here again. What's Bill saying? Biden seems silent that there's almost been 1 million COVID deaths, or have we been hearing the wrong news over here in the UK? Biden's been Biden's been silent on a lot. Here's the thing about the presidency and whatever. Most of what they campaign on, that people supposedly vote them in for, they really have no control over. So presidents get in, they go, look at what we did for the stock market, or look what he did to the stock market, or look what he's doing to COVID, or look what he's done with COVID. And really so much of it is just not really much that the government can do. You see that, especially with COVID, you see a lot of lockdowns in places where people are still getting crazy, or where they're highly vaccinated, where the rate of the vaccinated is really, really high, but they're still all getting, or a lot of them still catching COVID. There's just, COVID's a new thing. It's going to take a while to work through it and figure out what works and what doesn't. In the meantime, governments are going to fall over themselves trying to, look like they're doing something about it. Because if they don't, then people, they lose confidence in them and they get rid of them. It's just, I can't, I don't know if you guys know, I hate politics. I know, again, my educational background is a lot of politics and political theory, but that's made me hate it even more. It's a no-win situation if you're everybody else not in politics, guys. The rest of us out there, we lose either way. But I'm a firm believer that people are just fantastic to begin with. People aren't, I don't believe that people are necessarily evil or, bad or whatever. Again, I think people are generally what we would consider good. I just think that a lot of times they're lazy. Again, as I've mentioned before, and they kind of do what they, what they can do to get the most pleasure the easiest way, or to reduce the pain or block that pain the easiest way. And a lot of times that ends up hurting other people, but their intent is not to hurt other people. It's just for their self-preservation and things they want to do, and which follows itself into the markets, guys, which is why you have all that FOMO and FUD and all that kind of stuff that goes on all the time, right? So it's just being human beings. Let me see here. Esteban, what's up, man? Did I get my car already? No, that thing's still, I think you're talking about that Hummer EV. Yeah, no, that thing's still on order. I don't think I'm going to get it probably until the end of this year. I think is where they were talking about, end of 2023. So we'll see. It's a lot prettier than that Tesla Cybertruck nonsense. TV Canal, what's up, man? Let's see here. Just kind of catching up with you guys. Chairman says, how do you keep up with all these events? January feels like it's going to be a year with all these records. It just is what it is. I've got my own framework in the way that I view the world and government and central banks and things that are going on and all this interaction and people, right? And that serves me pretty well. That gives me a big general guideline of what my expectations are. And then, we just kind of whittle on down, closer time frame. Understanding that the closer the time frame, the smaller the time frame, the more likely the reactions are knee-jerk. So, especially if they're opposite of what the larger time frame understandings are. So, yeah, it's just kind of working with it, right? Let me see here. Tell you, Ryder, what's up, man? Blaze says, and we need government. You probably get a lot of people say, no, we don't. Let me see here. Kind of catch up with you guys. Daniel, what's up, man? Good to see you. Let's see here. Another idiot in here. We'll go ahead and block them on there. Don't I mean I'll EV instead of C? Oh, man. Ryan Riley, what's up, man? What TV Canal says, what about this this dump now under the low makes a new low and then pull back when we get bullish divergence on the daily RSI? Not sure I completely understand that, but let's take a look at Bitcoin here. By the way, guys, if you want to join us, you could do so at howtotradetowin.com. We'd love to have you there. Tier 3 is where it's at. Well over 200 hours of educational video content. 3 weekly live streams for Tier 3. Mondays, we talk about Wyckoff. Wednesdays, we talk about tips, tricks, and techniques, and then rules-based systems, stuff like that. Give you a deeper understanding of the indicators and whatnot, and how they work, how to use them, how to modify them for your needs. And then Thursdays, we talk about Elliott Wave. So always education every week. You know, you got chart critiques, chart requests, hot takes, all that fun stuff. We'd love to have you there, all right? Let me see here. So, TV Canal, what are you talking about here? I think maybe you're talking about a drop below this low here, and then get bullish divergence on the daily, and then a pullback? Or do you mean a reversal? Because if you mean this drop down here and then get a pullback, you're just looking at correction and then further downside. Again, nothing's changed from anything I've said, guys. This remains my primary account at the moment because nothing's invalidated yet. But don't forget, I've talked about the possibility that we could do a larger wave 4 triangle, which is Hank's preferred account right there. He loves that idea. Been talking to us about it for a while. And then there is the idea that if it does happen to drop down below the swing low over here, not even this one, but this one over here, you know, it's possible that we're playing a flat here. So you've got, you know, again, in this case, instead of wave 3 here with a flat correction for wave 4 and then done and head up, what we would have is this ending diagonal, which we've talked about previously, giving us a wave 3. And then we have this WXY down here for A, and then maybe an ABC up here for B. And then we'd have 5 down for C. And so 5 down, maybe 1, 2, 3, 4, get a 5th one down. If that happens, the idea is that we would just get a wick down here, a wick below the range lows, below 28.8. And, you know, again, likely targeting this weekly S1 pivot right there at 26,260 or so. And then right back up. Because if we get, the idea is if we get the breakdown right here, this is just sideways, guys. This is sideways for a year plus here. And so if we break down below that swing low there, people are going to freak out and go, oh my God, we're all going to, you know, the sky's falling, Chicken Little, right? Oh God, we're all going to die. We need to get out, right? And because they think it's going to now crash down, which, you know, again, it still could. But, you know, the idea of the flat here is that that becomes a bear trap. And so, you know, you get them all, they trigger the shorts here, boom, drop. It turns around, hits that that demand in that area, which there really isn't a whole lot there. See, that's the whole thing. There really isn't a whole lot there. All this demand is kind of here. But maybe enough gets caught up on a drop through here in this area that it can only get so far here, and then it rallies back up. And then, of course, you know, that ends wave 4 there, and then we head back up. So, I mean, you know, those are the two other bigger ideas of what may be going on. But right now, locally, there's no real guarantee that wave 2 is complete here. I've talked about the possibility that maybe we have, instead of 3, 4 here, that we've got 4 finishing up here. And then we still have 5 to go, which again would give us that that likely breakdown toward that weekly S2 pivot, right? Right now, this daily S2 pivot is, and the daily, by the way, is going to go away here in just a few days, the end of the month, and then we'll have new daily pivots for the month. But it's right here around the 1 and 4 hour S1 pivot. So that's a pretty, you know, got a couple of areas, a couple of you know, major pivot areas of support there, kind of finding confluence with each other. So that would be a good, you know, local target, maybe just a dip below and then up. But here's what I'm looking at locally right here. Until we get that breakdown there, we've got some possibilities. The possibility is maybe we've got a 1 here, and then we've got an ABC done right here at 2, and then maybe this is, you know, heading back up here. If that's the case, wave circle 3 has a minimum expected target up here, 45,307. Here's the other possibility, though. Maybe this count is still correct, but you've got A here, and then you've got ABC, ABC, and then you're working on 5 up, right? So you have A here, and then you have B as a flat, and then you'll have C dropping down. If that's the case, I think it's really got to kind of find some support right here, just a little bit lower at around the 61.8, because if you look at this volume profile on the drop here, you can see that right in this area here is where that 35,000 280 or so, which is right above that 61A. I mean, that's kind of where it is. Now it comes down a little bit further here, maybe to 65. Really, that would be kind of the area I would expect, though, because that's that bottom end of this high volume node right here. You can notice that this rallied up. Look where it hit. It hit the top of this high volume node here, right? And it came down. So, if it's going to come down and this count is a 1 and a 2, I'd really expect it to kind of find some support right around there. I mean, maybe it gets to 70.5, but as you can see, that's really kind of getting to the low end of that HVN, right? 78.6 is here, but that puts you right here in this low volume node area. I'm not a big fan of that. So again, either, if the count's correct, then either 2 is done and we're head up in 3, or wave B is printing this flat, and then we'll have wave C coming down toward that area and then rally back up. Now, again, if it breaks down below the swing low here, we're going to look at this wave 4 as being complete up here. And then this becomes basically a 1 and then a flat correction. Same thing, right? Except instead of B, it'll be wave 2. So you get a 1 and then you get this 2, and you have 3, 4, 5 coming down there. By the way, if that does happen, if the bottom is near, then you're going to see some overlapping here, probably like an ending diagonal, which probably finds support around this area. If it extends fully like it should, you're going to see it coming down here, testing this this descending channel support area, maybe pretty close to this 31,100, but that would have to happen pretty quick if it's going to do it. So, I mean, at the end of the day, if you're new, you're going, well, gosh, why can't you tell us what it's going to do? Well, because it's just going sideways. If it's just going sideways, there's possibilities in either way. And if I just stick with this is what I think it's going to do, and don't let you know what the other possibilities are, how we're reading this, why it might do something else, what are you doing here? That doesn't help you any, right? The idea here is to help you understand, to read the chart and read the market, what's going on, and understand where it may go and why. Right now, we need that breakout above here. Until we get this breakout above wave 1, it's definitely possible this thing could go on lower here. And again, that would be, 3 and then 4 up here, and then we'd have wave 5 of 2 finishing off. So, I mean, that's kind of where we are. And again, looking at the bigger picture, you have the idea of a triangle potentially here. Excuse me. Coming in here for, just a larger wave 4, wave 3, and then this is wave 4 in progress. Or you have, again, potentially this flat correction here. I don't think anything's happened at the moment that says the top is, there's significantly a possibility that the top might be in. It may be in, but I haven't seen price action do anything really yet that signals, okay, it's got to be the top. There's no real significance in the move down yet. In comparison to what's going on with the chart here. Here's the other thing. The Fed, I think the market is really pricing in the Fed. And so, the dollar market is. And I guess that, again, that's just a proxy for really risk on, risk off, right? But here's the thing. If the Fed doesn't follow through with this real hawkishness and do the things that they really expect them to do, because it's being priced in, that could cause a significant movement in the other direction. So as long as the Fed continues to do what it says is being real hawkish about what it's going to do, then, okay, things continue the way they are, right? With your dollar and everything. But if the market's expecting a rate hike, which it seems to be in March now, and the Fed just come up with more hawkish talk here, and then the Fed doesn't do that, that's a significant, we could see a significant move in the other direction. So, people are like, stock market's going down right now, and the dollar's going up, so Bitcoin has to go down. Well, again, remember, not all the markets are connected exactly like that. They're all their own markets, and their participants, determine just how risk on or risk off they're feeling at that time in relation to that market they're in. Crypto is something different than your other markets, your legacy markets, or whatever. Even though we've seen a lot of rallying over the last, year or two here with the stock market because we had that strong drop, right? But still, the crypto market is considered this place where you're really going to get those returns. Right? Everybody lives that dream, right? I could put in $100 and become a millionaire next week, right? I mean, that's what everybody's living off of, right? That's why you see everybody out there talking about, oh, I flipped this NFT, I paid, $10 for it, and look me, I just made $50,000 or $50 million or something, right? I mean, I know I'm exaggerating a bit here, but really, if you notice, those are the kind of things that are being said there. If you watch your major influencers on crypto Twitter most of the time, they're always talking about these single great trades they had where they made all this money, right? They rarely ever talk about what they've messed up or how much they've lost or where these large losses are. So you see one trade out of their group of trades, but that's all your mind is on then is that one trade and how great they appear to be doing. But you see all this stuff kind of coming up here. And so, unfortunately for retail, it makes retail hungry for getting in and see, the retail wants to do that, right? Your bigger players, they're scared about inflation. And so, they're worried that inflation is going to come up and they think they can put their money in Bitcoin and be protected against inflation. I'm not really buying that. I don't think that's really the way it's going to work, but that's where you got it. So as these narratives change, as these things change, as different things happen, you're going to see shifts and movements. But the real thing to take from all that is that your markets are all separate. They're not going to move hand in hand. Bitcoin does not move up or down because the stock market moves up or down. Bitcoin shifts and moves up or down based upon the participants' understanding of the particular risk environment, not just within crypto, but within everything, And so that's why sometimes you'll get things going one way or the other. That's how we could have stocks continuing down bit by bit and Bitcoin continue up for one last hurrah before really just crashing off, right? So, pay attention to your market the market that you're in. Don't think too much about the other markets. You can kind of watch them and go, well, they're not looking too healthy at the moment. So that keeps you, aware of what's going on and, watching your market. But other than that, don't think, oh, the one market went down or went up. So, Bitcoin needs to go down or go up because it follows it or something silly like that. Okay. So there's that. Let me see, guys, here. Andrew says, after the Fed meeting, we dropped quickly, but it seems to be holding out now. 33 to 35 seems to be strong. Yeah. Again, you had the knee-jerk reactions with the Fed release, with the minutes release. And so, had people trying to play that. Because if you're right, you've got a chance to make a good bit of money in a very short amount of time. Guys, I said it before. I'll keep saying it again. I don't think you should ever be involved in trading news events. It's just, it's too easy to lose money. The odds are significantly against you. And, sadly, many times people get in there and they have the right direction, but they're just in too early and all that whipsaw action knocks them out because they go heavy. Either heavy position or heavy leverage or both. And they can't withstand that whipsawing price action. I think news events are one of the things where new traders get caught more than anything else. And it's not because they're necessarily going the wrong direction. You've really got a 50-50 chance. It's either going up, it's going to go down overall, right? But it's all that whipsaw, all that noise that happens that takes them out prior to getting a chance to do it. Let me see here. Blaze says, it's so true. I used to get discouraged that I wasn't making progress like some of these enthusiasts just to find out it's fluff. And I'm seeing the one trade out of how many? Yeah, it really is. And I'm not saying there's not good traders out there, guys. I'm just saying you are a steward of your money. I used to talk about it a lot. You need to have respect for your money. You had to trade some sort of time and or effort into getting to the position where you can make that money. Stop throwing away like you didn't. Stop throwing away like it doesn't mean anything. It does mean something. And the sooner you learn to respect your money, the better off you're going to be. And so when it comes to, to these things, to this online world, which I've told you guys so many times, there's so much information, so much more, so readily available to you guys than I ever had when I first started. Like I told you, it was all physical mail. I bought a newsletter when I first started, $200 a month, physical mail, one newsletter, $200 a month, one newsletter, physical mail. How many times can I say this? Seriously. And now you guys have a ton of free information out there, and a lot of it's good, but even more of it is half-truths and even outright lies. But as a new trader, you don't know how to figure out which one's truth and which one's lie. And so it's the same thing when you look at the people who are online. I don't know if you guys have been paying attention, but all of a sudden, everybody's got a course you can buy these days for anything. All of a sudden, everybody's an expert on everything, right? And what you find as you get into those courses is some people are and some people really aren't. But again, it's the same way with your influencers. You got to be careful who you follow. And when you follow them, you got to be careful to pay attention to what they're saying, and more importantly, what are they not saying? I think this is one of the biggest things when people look at research or explanations or whatever else they're looking at. They sit there and they kind of hyper focus on what's being said, and they pay no attention to what isn't being said. And in certain situations, that could mean quite a big difference. Again, guys, you need to have respect for your money. You're a steward of your money. And so when it comes to people, you don't want to blindly follow. Even me, I keep telling you guys, don't just blindly follow the things that I say. Listen to what I'm saying. Ask some questions if you got them, but then go online and do some research. And I know that's the big bane of everybody's existence. Nobody wants to go do their homework. Nobody wants to go understand things better themselves. There's a lack, I'm a strong believer that there's a real big lack of actual pursuit of knowledge these days, guys, whether it's books or whatever. Everybody wants, the simple soundbite. They don't want to have to think about it. They just want to be able to, oh yeah, it sounds like it's what I think, so there we go, let's go on. You're not going to make it any better in life if that's the way that you view life, guys, okay? Let me see here. So yeah. Let me see here. You know me, I'm a big learner myself, right? I'm constantly, gosh, man, if you guys could see my library or my Kindle library nowadays, geez, oh whiz. It's crazy how much I have in there, how much I've read, how much I have left to still read. But it's because I never believe that I know everything, guys. I'm always trying to expand my knowledge, whether it's in the field I'm in or in other fields, because what you'll find out is a lot of stuff that happens outside of your field, that contributes to the people who are in your field, which contributes to what's going on in your field. Doesn't matter what it is. But people don't really want to learn more. People just want to be told that whatever their knee-jerk reaction, my feelings say, matter and it's correct. Your feelings don't matter, guys, in life or in the markets, right? So market doesn't care what you think. We used to always say that all the time, right? Markets don't care what you think. They don't care that you're sad or happy or whatever. Markets are going to do what they're going to do. So it's up to you to kind of control your emotions there, right? All right, so let's jump on here. Now we've got this DXY here, guys. Man, look at that. I think what we've got here is maybe a flat correction here. So A, B, maybe C done here, maybe. We're looking for a break above the swing high here. That gives us a wave 5 target up here around the R5 pivot on the 15-minute, about 97.75, maybe somewhere around there. Wave 2 should then kind of pull on back into this 96.5 level at least, I think. I don't think it's going to get caught up here at 96.76. I'm going to watch it as it does, but I think we'll at least get down here 96.5, maybe continuing a little bit lower below that. But we are above the daily pivot, which for now doesn't mean a whole lot. Again, the daily pivots, they're going to change here in a couple of days. Actually, today's the last day. This is the DXY here. So, it's closed on the weekend. So we'll have new pivots coming on Monday, and that might help us see things a little bit. But I don't think it'll be a huge bit off, maybe be a little bit higher up here. In which case, it might be around this kind of wave 2 expected area. But the fact that we're above that pivot should mean that we just kind of come back and retest it and then head up further with that. But again, just because the dollar's rallying at the moment doesn't mean that Bitcoin has to necessarily fall. Again, it's all about, the dollar and Bitcoin are all about risk and then how the market feels about them in those particular markets, how the market participants feel about it in those particular markets. So again, I still think we might have further upside with Bitcoin, but we need to see those confirmations of the move up. Until then, we have to be ready for lower. I mean, it's just as simple as that. And as long as you take that position, guys, and you really understand what's going on there and where you're looking for confirmations and validation levels and stuff like that, the better off you're going to be as a trader. If you just get in this mindset that something has to do with this one thing and that's it, man, you're going to get left out on your rear end quite often, okay? So just be careful with that. Oh my gosh, what are all these idiots coming in? Blocking them all. Oh. Let me see here. Diego, what's up, man? Good to see you. Definitely busy days, man. Andrew says, on the DXY, I still see a rising wedge. JMO, does that mean just my opinion? I don't know. A lot of this, letters, what they mean. It says top resistance line starting around September of 20. Daily and week. Okay, so we're looking at daily and weekly here, right? Let me pull out my other chart here. This is just the regular DXY. You see no volume down here. Let me pull up the futures market, which you can trade DXY futures on the ICE, but not on the regular one here. Not on this one. Where is it? Let me see here. I think I might have accidentally got rid of it. That's fine. I'll pull it up right here. Let's see here. Oops. DXY. There we go. Oh, let's see. Newsletter. It was the same one that I put out there in the newsletter while we had that going. By the way, guys, I'm still working on getting the newsletter going again. Definitely changing the way it's done. So if you guys are signed up for that, don't give up on me yet. I think we've got a better version of it coming out soon. So this is that same kind of... Oh, man, this isn't even the same one. Where are all my marks? Yeah, you're talking about this kind of looking, this wedgish looking thing here, I guess. From you said September of 20. Oh, you're looking from here to here? I don't know. If I was to look at a wedge, I would look from this one right here. This March of 21. Kind of up there. But the thing I don't like about that is price basically rides the wedge bottom here, And for patterns, we generally want to see a strong move between support and resistance. The stronger and sharper that move is between support and resistance, the more likely that pattern is to be correct. If price is just like hovering along the resistance or the support, it weakens that particular pattern's effectiveness, is what I've found, over the last 25 years or so of doing this. But it's just one of those things I've kind of picked up. So even if we're putting it from here to here, you've got all this hanging here. It's not making these sharp moves back up and forth between it, which kind of leads to, continuation up, because price is just continuing to grind higher on that. I hope that makes sense. Yeah. And again, guys, this isn't anything that I've actually gone out there and, applied statistics to figure it out or whatever, but it is the one thing that I've noticed, doing this for as long as I have, that when it comes to patterns, the more definitive the movement between support and resistance is through that pattern, the more likely that pattern is going to play out as you expect. But if price kind of rides the support or rides the middle of it or rides resistance, most often, the pattern doesn't play out as you expect. And sometimes it still kind of does, but I tend to believe that when that happens, it's because of something else, not because of the pattern. Just because, again, as I've noticed throughout the years, that strong movement between support and resistance is what really defines the pattern. It defines those areas of support and resistance, so that way when you break out or break down through support or break out through resistance, it's a real movement, not any kind of what we would generally consider, a bull trap or a bear trap. So yeah, if I'm looking at that, that's what I'm interested in. What I'm really interested in, guys, everything else aside, we can take everything else off here. The one thing I'm most interested right now with the DXY here is the fact that we've moved in sideways between the pivot and the R1 here. These are the weekly pivots. That means these are valid all the way through the end of the year, another 11 months. And so, if I see this continue and break out above the R1, that's a good signal it's going to keep on rallying up. If we get rejected around this area and it comes back down, and then it bounces off the pivot, that's a good signal that it'll probably continue up then. However, if we do this and we lose the pivot, you absolutely have to hold the S1. If you lose that S1, it's likely running down. So, big picture-wise, as far as the dollar, everything else aside, inverse head and shoulders and swing pattern targets and Elliott waves and all that, this right here is what's up as far as I'm concerned. And if we do have, look at this weekly here, guys. We are just crossing bullishly this week. Right off of, dipped into oversold. We're just crossing bullishly, guys. So on the weekly, that's a lot of room there, right? That could send this impulsively up through the R1. And again, if it does that, usually when it does that, it'll run the Rs. So, yeah, 115. Jeez, oh whiz, right? Crazy times. And again, that becomes more relevant once you get above this kind of area here, right up here, this 102, 103, 104 kind of area. So what would likely happen is if you're breaking out of this area, price is probably going to take off like a scalded cat, head on up. Because this is resistance here since 16 and 20 here. And of course, you have this smaller bit of resistance here, which has been back here since the 15th, since 2015. And then, again, 2015, and then this one right here in 16, this one here in 19, this one here in 20. So, getting through this area opens up, for a good move up with that. I know some people are like, what? We're going to go up that high? No. Yeah. Possible. Right now, again, guys, it's done what's expected. It's kind of moving as we expect, but that doesn't mean it's going to continue to do so. And so if we look here, we're still below wave B here. So, technically, this could be just a pullback before further lower. But right now, here's the deal. The Fed continues to remain ultra, hawkish. And as long as they, as I mentioned earlier, as long as they follow through with this hawkishness and they do the things that the market's expecting, I don't think the euro has a chance. What changes that is if the Fed slips up and doesn't follow through on its hawkishness, that I believe the market is starting to really price in. So that would be a real big, slap in the face of the market there, and, they do the other thing. But unless we get that, and the ECB becomes really hawkish really soon, until we have those two things, I think, the dollar's just in control, and that's just what it is. I've been talking about as last year developed, what was going on with what we were looking at here and my expectations for the Fed, which, guys, if you've been following me for last year, everything's followed exactly as I talked about for the last year, right? So even to the point that, we got the tapering before the end of the year, which I talked about, we were likely going to do. And, before summer last year, I was telling you guys that I believe we were going to have 3 interest rate hikes in 2022. And now they're talking about potentially 4. So, again, I generally think I have a pretty good handle on what goes on with the Fed and whatnot. It's just how long does it take the market to kind of absorb that and do its thing? And, the fact is we've been running up, with this secular bull market since 2009, right? The market found its bottom after the GFC there right around March of 2009. And we've been going up ever since. But again, I want to warn you about Bitcoin, guys, and cryptos just in general. Remember, they've only been around while the market has continued to go up, while we've had this excess of credit, right? And I've talked so much over the last few years about this. I've talked about how that enabled the U.S. to become the largest producer of oil in the world, the number one exporter of oil in the world, right? Because of the way that credit worked and how expensive it was to pull oil out of the ground sideways and through fracking and whatnot, but how the expansion of credit made it easy to do it, which enabled them to convince them to do it. All that, but so it's gone through everything, right? We've kind of talked about how this has worked over the last, 12, 13 years now. Did I think the top was going to come sooner? Sure, I did. I got the first top and drop almost to the dollar, which was great. And I honestly thought that might be the move down. But prior to that, I had already talked about, I've got it somewhere there in TradingView, still available for you guys. I've showed you here a few times, that chart where I said, well, if it's not the bottom, then it's just going to be this expanded, this inverted triangle like this. And we get a 1, 2, 3, 4. So A, B, C, D. A, B, C, D. A, B, C, D, E. There we go. I had to think about it because we're coming up from here. So A, B, C, D, E. That E was March of 21. And then that's a wave 4 pattern. And so then we're on wave 5 doing this thing, right? So yeah, kind of go up a bit further. But we're talking about the end of a 200 and somewhat year cycle, guys. So yeah, it didn't happen as soon as I thought it might, but definitely really kind of starting to make itself known right now. And then you've got this clash of events, right? You've got prices just going through the roof. You've got zombie companies have been held up by the Fed here over the last few years. The Fed's withdrawing its support now. You've got all this going on, and that could really kind of contribute to a deflationary spiral. Again, businesses going out of business, people losing their jobs as a result. And so the prices of things, not so much money to chase prices. Prices drop, things become cheaper. People are losing their jobs. People are, because of that, can't pay their mortgages. They're being foreclosed on. Foreclosed homes are selling for cheaper because the bank just needs to get them off the books because the law says they can only hold so much property in relation, or so many assets in relation to deposits and whatnot. And so that depresses prices of homes, and it's just everything just kind of gets out until that credit gets, all that expansionary credit we've had over the last, really since we got off the gold standard, really. So, you're talking about what, 50 years almost of it has to unwind. And then that's again is part of my premise for the whole idea that we're coming maybe into a bigger depression type thing. Now, the great thing is, if you're a trader, it sucks. It just sucks because we're not in this great kind of, we can do whatever we want thing. But if you're a trader, then all you're doing is trading the market, whether it goes up or down, and you are making money. So if you're a trader and you learn you learn what to do correctly, the whole depression thing sucks, and it sucks for everybody in the government, the government and the people and everybody. But you yourself, you can survive that and do extremely well during that time. Many of the greatest fortunes in history have been made during recessions and depressions. So, because the market still moves. And as long as you can be in that market and you know what to do and what to expect, more or less, you know how to do it correct, risk management, all this stuff, you're still going to make money. But I think too many times people come in and they think they want to be traders, but what they really want to be are investors. And so, and you can tell this because when prices start dropping, the markets start dropping, they start freaking out. But as a trader, all you want is volatility, because that's what makes trading easy. You just have to identify the trend on whatever time frame you're on and get in with that trend and then get out while they're still liquid. That's all you have to do, guys. But we tend to make it a lot more difficult on ourselves, mostly because of our, emotions and whatnot that we have. So, yeah. My God, all these people here. There's always money to be made. That's right. TV Canal says if the DXY breaks 99, it'll be super bullish to them. I mean, it's just right up here, man. I mean, it's kind of just getting right there. I don't know that I would be looking for 99 because that just gets you right into all this activity here. I'd be looking for a breakout, at least a breakout above that. I mean, if you're going with the 99 route, I'd probably look at a breakout above 100.931, so basically almost 101. Because otherwise, you're just hitting the low end of all this activity here, where we kind of got rejected here and here as well. You see? And we just found all this activity here, 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 here. So, I mean, if you're going to use 99, I'd probably use like 101. Just because it gets you outside of this activity. Doesn't guarantee it's going to continue up. But I think it more likely at that point than if it's right here. Just my thoughts on that. Let's see here. Oh my gosh. What is up with these crazy people? Oh, man. Corey, what's up, man? Good to see you checking in there. Okay, let me kind of get up here and check out some other things we got going on here, guys. Let's see. By the way, as traders, I don't care if you're trading short time frames. Two things I always tell new traders, or just traders in general. Listen, man. No matter what time frame you're trading, zoom out to a larger time frame. Zoom out and look left all the time. Doesn't matter what time frames you're on, always zoom out and always look left on all those different time frames. It's going to make it easier to find those areas of support and resistance. Like I said right here, just zooming out here to this daily and looking left there, you see that 99 just gets you right into this, right to the bottom of this area here. And so to me, there's too much potential resistance, too much supply potentially in this area. I want to see a breakout above that. If I'm looking at this area as some kind of indication of bullishness to me, sure. Just because of that. Yeah. So yeah. Let me see here. Let me jump on these things real quick here, guys. As always, let's see. Let's look at ARK here. Oh, Kathy. Oh my gosh. She's not liking life too much, huh? Look at that. This is the daily. Let's kind of zoom out here a bit. Look at that 3-day. Woo, look at that volume. Wow. Let's kind of zoom out a bit more. Weekly. We're oversold on weekly. We're at that S1 pivot. Now, looking at the weekly here. Remember I said zoom out and look left? You zoom out to the weekly, and you've got a doji candle on high volume. Look at the volume before. It's a pretty good bit higher here, but look at the difference in the candles. Very large candle spread, very small candle spread on much larger volume. Demand is showing up finally. It's doing so around the S1 pivot. But keep looking left here. Look at what you got. Look at this right here. This area is actually where it's finding that support at. Like this kind of area there. You see that? So I think next week we might start seeing some, either at the beginning or mid of next week, we'll probably see ARK kind of rebound here a bit. If it does, though, I don't know that it makes much of a difference. Well, 1, 2, probably a flat here. So I don't have time to count this real quick here, but if I'm looking at this, I'm thinking maybe 1, 2. This might be a very small 3, 4, and then 5 up here as an ending diagonal, maybe. And if that's true, then we've got basically a 1, 2 as a flat, and then we've got 1. Oh God. Maybe this is 3 coming down here, 4, and we get a 5, and then an ABC, and then 5 more down. But I'll look at this prior to next week, and we'll figure it out a little bit more on that count there real quick. But yeah, I mean, coming up here, looks like maybe a 1, 2 flat here. This could be a 3, 4. And here's the thing. If this is a 3, 4, man, we've still got 5 coming in. So it might be the chance to buy in on ARK there, at least for a bounce maybe. We're finding a good area there on the weekly. The monthly, though, the monthly still hasn't dipped into oversold yet, so that kind of leaves it interesting. But we do have hidden bullish divergence printing right now, and that'll lock in for the month. So definitely watch this right around the S1 pivot. Definitely watch it. If this is 5 up here, Then I think any rally should get caught up in this wick here prior to getting through that pivot there. Should kind of come up into that and then head back down. I mean, looking at here on this, it looks like a 1, 2, 3, 4, 5, and then A, B, C maybe. And then, so it's 1, 2, and then 3, 4, see, and then 5 come up there. So on the monthly, it looks like we got 5 up and done. But yeah, definitely no surprise in all this here. Tesla. Tesla's still doing its drop here. I've got minimum wave 3 down here at about 750, 450. As this kind of works out here. This might be 1, 2, and then maybe 1, 2, 3, 4, 5. So this might be 3. Get 4 probably up into this area. And then we'll get 5 maybe here, maybe a little bit lower. A little bit beyond that 3 there. 4 should come up around the same area. 5 should then come on back down here. And so if we're doing, this as an ABC, well, there you go. Then you move up, right? But if this is 1, 2, 3 here, then this, lines, arc isn't going to continue to go up. Isn't just an ABC if this is working on 5 down. This is 1, 2, 3 here. Kind of get into this area. So either way, I think we're getting some sort of bounce coming up here for the tech sector. So if you're looking to make some shorter term plays, that might interest you. Oh my gosh, MicroStrategy. Look at that. Oh, yeah. So there's Sailor and his thing. Those of you, this chart's all messed up now, but those of you who might remember this chart from back when I originally did it, and I was comparing MicroStrategy against its competitors and how they all took off around 2015-16, and it just kind of went sideways until it bought Bitcoin, and that's the only reason it seems to have gone up. And then, of course, now it's off, 60% off that high. So, you want to kind of be careful with that as well. But, again, if Bitcoin's going to rally, MicroStrategy, and especially if tech's going to rally, MicroStrategy should rally with it a bit. So you might have a chance to kind of get in there and run some up a little bit with it maybe as it's going through. Let's see here. ARC 1, 2, 1, 2 would make you really interested. Man, if ARC was doing a 1, 2, 1, 2, man, that's a heck of a move down after that. Right? Andrew says biotech stocks have been crushed. Wait, watching for a local bottom. Yeah, and so here's the thing, guys. You often have people telling you to buy the dip. Listen, here's the deal. Yes, you buy the dip, but only when it makes sense. It doesn't make sense every time it dips to buy it every single time. No. You got to zoom out to these larger time frames. When everybody's scared, when everybody has decided that it's going to just continue dropping off there, then you get interested. But it's the hardest thing for a person to do emotionally to pull that trigger on something like that. Because you're fearful like everybody else. Nobody wants to buy that and have it continue to drop, right? But that's where it is. That's where, honing your trade, as a trader, that's where it comes in. So anyway, NASDAQ composite here. I've got a minimum wave 3 right here at about 12,767.89. Maybe got some questions in what's going on here because it looks like we've got 1, 2 here and then 1, 2, 3, 4, 5. So as long as it stays below wave 2 here, we'll look at least to go down toward this area. If it breaks out above wave 2, of course, then we'll have to invalidate that count. S&P E-minis here, guys. Let's see. Kind of doing this sideways thing. Again, keeping me a little iffy here. Looks like 1, 2, 3, 4, 5, A, B, C maybe. We're almost topped out up here in the 30-minute and overbought an RSI, Stoke RSI. RSI, a little bullish up here, but just on the bullish side of neutral there, 55. So we're just, again, as long as it stays below wave circle 2 here, we break down below the swing low. Wave circle 3 has a minimum expected target of 41.27. And the Dow now, right? Dow, same idea, man. Again, this one looks like maybe a 1, 2, and then a 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5 maybe. And so this is maybe a 1, 2, 3, gets rejected right here around the pivot. Makes sense. But this thing might keep kicking up, in which case it leaves things open. Again, a breakout above wave circle 2 up here, invalidate the count. But if we can get this breakdown back through here, minimum expected wave circle 3 target of 33,280 and 50 cents. Could push down further than that though, depending on what this subdivision's going on in here and how far it pushes. Let me see here. Oil. Let's see. Oil, man, just being a heartbreaker here. It's just really kind of, I think, with this drop here this morning, I mean, I guess you can maybe make an argument for 1, 2, 3, 4, 5, and then an ABC here. So as long as it stays above wave 4, I'll say maybe that's wave 1 of 4 or wave 1 of 5 and heading up. Minimum wave 5 up there at $90. But if this is a wave 1 and this is a wave 2, well, we could see it potentially give us a wave 5 target around 91.73. But if this is 5 up, then it's done enough. It's gotten above wave 3. Wave 5 could be done right there, and in which case we're looking for further movement down here, breakdown lower. Now, my other thought I was thinking was if we get a breakdown, my first thought before the top is in, I'm still kind of looking at this 90 area, is that maybe wave 4 is still playing a flat here because we're getting that across a lot of USD pairs in the FX market. And so we get an ABC down for A, B, C for B. So maybe 1, 2, 3, 4, 5. So A, B, C. And then 1, 2, it would be like a 3, 4, and a 5, targeting maybe this S1 pivot area here, right around this wave, parentheses 1 resistance, at about 85.7 or so. Right about that area. Maybe as wave 4 ending over there, and then again, wave 5 up toward that $90 area. But if we continue significantly below that S1, I think we put a lot of idea that maybe wave 5 is done. Very short wave 5 is done there and we're headed down. But in that case, we need to drop down below wave parentheses 4 over here, Roman numeral 4, at 81.90 to kind of confirm that that larger wave 5 is probably done, at least locally there. Let's see here real quick. Silver. I'm so far over here. All right, let's see. There we go. Silver, I believe we're working down in wave 5 of 3 here. Locally, probably a wave 3 target right around this S2 pivot on the 1 hour. $22.03.5. So this has been following. This has been trekking real good. This has been a nice clean push down. You can count this once we got through this area here, through this and this here. You can kind of count this. You got a 1, 2, 3, 4, 5 gives you 1, and then a 1, 2, 3, 4, 5. There you go again, and then 1, 2 working on a 1, 2, 3, 4, 5 gives us 3, 4, 5 coming down. 4 pops back up. 5 comes down lower. Kind of idea. So overall, silver should continue to trend lower, I believe. Gold. Let's see here. Gold kind of doing this sideways thing right here. If silver's going to continue to head down lower, like I was talking about, then gold should be expected to head down lower with it. In that case, then we're looking, as long as wave 2 holds up here. What is this high here? $1,793.90. As long as that holds, look for potential wave 3 down here about 1761.90. But again, overall, I'm still really expecting just to continue lower overall. Right now, you can see it dipped just below this wave B support, and that's enough that we should, if the count's correct, then that should indicate that we are headed down lower. That wave 4 is done here, wave 5 is in progress down, lower on down there. So yeah. I still think silver right now. I don't have any reason to think that silver's not going to drop below 10, maybe $8. Gold, I still think is going to probably drop below 1,000, maybe around 900, 950, maybe. But again, I think those levels that you're talking about there, Andrew, 1450 for silver and 1400 for gold, those are, I think gold probably closer to around that 1300 area. That high volume node's right around there. So I could see a potential support in that area, yeah. But if we break that area, then, again, still looking at heading down there. The only mistake I made on that call for gold was I was looking for this to finish prior to 2011. Was it 2011 swing high? Over here? This one right here? Yeah. So I was expecting this. I was counting this as 5 down and then a WXY 3 up here. And then head down. But it continued going up. And since it broke out above the swing high here, this can't be 5 down. It has to be a flat. So it'd be 3 down, 3 up, and 5 down. Now, again, as far as the flat goes, normally a normal flat, regular flat, is going to drop down below wave A. So again, that gets you down there below 1,000, right? But there is a running flat that'll stop around 61.8 usually, 70.5, 61.8 of wave A. Now, my only issue with that, and that might get you right around here. This is that high volume node I was just talking about, 1300. My only thing about that is we didn't really rally up a whole lot higher here than what you had over here. Just a few $100s. I don't even know. 1915 to around 2080. Just 100.5, right? And so if it's a running flat, usually wave B is going to run you up 138.2 or, maybe even 161.8 and then pull back. This few dollars above the swing high really has me, just generally the way it plays out, has me thinking we're headed, if this is a flat correction is correct, having us drop back down here to this area over here. Around that 900. See, there's a high volume node right there, smaller high volume node right there around 900 or so. So that's what I'm that's what I continue to look at there. But, other than that, we caught most of this rally up, which was great. I told our members there this was a buy back over here in 2018, pretty close to these lows here. So that was a great rally up. Went a little bit further, but overall the same kind of plan still is in play as far as heading down. Now, as you can see here, what doesn't bode well in the large time frame here, the weekly for gold, is we're getting rejected right here at the weekly pivot on gold, guys. We're getting rejected right there. That's not a good sign. And if we lose S1, well, there's no reason why we shouldn't be getting at least S2 and likely, much more likely down here, or like I said, break down through that down below. So that's my thought process on that, guys, as far as what's going on. And by the way, this also works really well in a deflationary environment, right? So yeah, we have this really high inflation short term right now, right? Year, maybe 2 years. I say short time in the grand scheme of things, because if the economy's rolling over and the government's no longer sending money out, and the government's not only doing that, but now they're talking about normalizing their books, so selling a lot of their mortgage-backed securities or MBSs and treasuries and stuff, then that puts a lot more downward pressure on there. Plus all the zombie companies, we already talked about that, going down, less money being spent in the economy, and people saving what little bit they have. All this contributes to deflation. And so if you're getting deflation, the value of gold's going to drop, right? Because it'll be worth less, right? I didn't say worthless. I said worth less. So, again, if you're still following the idea that maybe, or if you haven't, maybe you're going to start following the idea that deflation's a likely possibility coming up. Well, there we go. Now, I get a lot of kickback on that right now, more than before, because inflation, prices are jumped up where they jumped up. But here's the thing. With the Fed normalizing, raising interest rates, making things more expensive to buy, making loans more expensive to take out, less money's being spent. And so that is going to put downward pressure on the prices as the supply situation, as the supply bottleneck works itself out. So over the course of this next year, 2022, if we see that the Fed keeps what it says it's going to do. Interest rate hikes does that, and especially if we see that the bottlenecks, the production and supply bottlenecks that we had, are coming down. There's really not a whole lot of support for the idea that precious metals run, like gold or silver. The only, if you're talking about metals and stuff, if you're really interested in something, with all the EV technology and whatnot going on, maybe you look at lithium. But I'm not sure how well the EV market does in a floundering economy, because it costs a lot more to produce EV technology, and the vehicles themselves are a lot more expensive. The batteries themselves are a lot more expensive. If you're 8 years down the road with your car and your battery goes out, it's probably gonna cost you more to replace the battery in your EV than it will be than the vehicle is worth. So these are a lot of realities that's going on with all this. So I'm not sure that EV technology continues to go on. Now, you can have government continue to print and allocate toward, not government print, but to allocate money toward EV makers and whatnot, and EV technology, and maybe that helps it deal with it as the economy goes down. But if this is some long-term, depression or something, decade, 2 decades, whatever, if that comes to fruition, then I don't know that EV technology really does a whole lot during that time. So definitely something to watch there, if you're trying to play that particular thing. Yeah. Teddy Ryder says EVs can make hot-rodded turbo diesel trucks seem cheap when they fail. Hey, right? All right. It's really bad. It's really bad. So yeah. So again, you guys know I've got that electric vehicle on order right now. We'll see if I go through. I got a little excited at first because it does a lot of cool things. It's pretty cool, but when I'm still a West Texas guy, right? And so it's still all about especially diesel engines and whatnot. So I don't know. Finding hot spots to charge can be a challenge sometimes. I've noticed even here in San Antonio, a lot of them are taken up like all the time. And unless you get one of them super fast chargers, where it's done in like 20 minutes or whatever, you'll be sitting there for hours waiting for it to charge. It just, stuff just really kind of irritates me. You can get it for the house, and that's what I would do is I get the plug at the house done. But we like to take longer trips. We drive. Texas is a big state, right? And so I don't want to take a electric vehicle on one of them long rides and get caught not being able to find a usable plug somewhere along the way that doesn't eat into the time of the travel and all that. So I don't know. We'll see what I do. If I don't, I'm just gonna buy another big diesel truck and have fun. We get it. You want a big whip. In a perfect world, I would have a Hummer one. I won't lie. I always wanted one. Yeah. It's Texas, and it's West Texas, and it's, ranching life and all that. And so, trucks are just a part of life out here. Even though I'm in South Texas now, same idea. They just make life easier. And if you don't live in an area where it is such a big thing, you may be like, what the heck, man? Seriously? But these trucks, guys, I'm telling you, you get a nice, God, you don't even get a dually, guys. You can get a loaded 1500. That's your half-ton truck right now. You're probably paying 70, 80, 85 grand. 1500, man. That's not a diesel engine. That's not a dually. It's all this stuff. That's going to run you 100 grand plus. So I don't think a lot of people understand that when we talk about trucks, they think all these little beat up old cheap things. These trucks are expensive today, guys. It's crazy how expensive they are. In just a short bit of time now, really, last almost 20 years. Short bit of time for me, anyway. Just put a big diesel generator in the back, right? And just carry it in the truck there, and then if it runs out of electricity, hook up the diesel generator, hook it up to the diesel generator, and get the generator going. That's really that's really not a bad idea if you're in that situation. I'd rather not, though. And the Hummer itself, the one I'm interested in is not the truck, it's the SUV. So it would actually be inside the vehicle. I'm not good with that with the generator running. Anyway, ranchers equal long money. That's right. Anyway, guys, would I expect to see 1,200 to 1,400 gold? Yeah. My expectation is still that at least. Yeah. Especially so if we lose support here. So just watch it. If we're losing 1673.30 here, I don't see any reason why we shouldn't be getting down here, at least to this weekly wick here. So the EQ of that puts it right around 1470, 1475. I don't see any reason we shouldn't at least hit that. But again, I think we drop below kind of this area here and we continue heading in down. I think if you want to be long gold and we lose that level right there, I think you really kind of, for all intents and purposes, look down here toward this 1,200, 1,300 area at least. You know, counting this up, if you're long gold, this has to be 5 up. You know, I mean, you'd have to go 1, 2, and then 1, 2, 1, 2, 3, 4, 5, maybe. So 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, maybe. You might be able to get that. I didn't count any of those little waves in between or whatnot. But that's kind of how you'd have to read that up there. But I think if you are, I think this is A, this triangle is B, as I've talked about. You know, this is a B triangle, which gets you a C on a move down. And again, should at least get you around that 1,100, 1,500 area. But you lose that, I think you definitely look down here 12, 1,300. You lose that. I think 900 to 1,000 isn't a bad target at all. Just big picture on that, guys. Okay. Michael Otis, what's up, buddy? He says, my buddy in the energy sector is super bullish on solid-state EV batteries like QuantumScape. However, they're pre-revenue at the moment and have tanked as of late. Yeah. It's one of those things where the technology, there's possibility in it, but they have to get funding long enough to make it relevant, right? A lot of things that, you know, technology-wise often come out during periods of high, excitement and loose money. And then something happens to the economy, it goes down, and they're out of favor, and they don't come back for another 10 or 15 years or something. You can think of that in terms of what's going on with Apple stuff, right? Apple, kind of pushing in with the whole, what were the iPods and whatnot coming out there. And then, doing all that, pushing up into early 2000s there when we had the dot-com bubble, looking at things like the talks about virtual reality and stuff back then, and it was all the hype. It was all up there, and it, had the money continued, maybe they could have developed technology or something pretty good at the time, but instead, economy dropped down. We had the dot-com bubble crash, economy turned down, and so then loose money tightens up, goes away, and then it doesn't happen until after the money gets going again that money is put back into R&D and kind of making a viable. Something that's viable, because you can't just produce it, but you've got to be able to make it where it can be mass produced as cheap as possible. Otherwise, you don't get the buy-in, right? So yeah, maybe we'll see for sure. But the technology definitely has to continue to get better with batteries. It has to. But the other side, the other bad side, the other really nasty side of EV technology, of batteries. What the heck do you do with them afterward? Because right now we're just looking at landfills, what's going to be landfills of these big batteries, and that's not good. With all that corrosive stuff and everything that's in it, I mean, that's not good for the environment, right? So, what do you do? How do you I don't know that there's any way to really recycle the batteries. So I think those are two areas that EV technology really has to kind of to get figured out. I think you got to find a way to work with those batteries instead of just throwing them in a landfill. And you've got to find a way to make them last longer, make them better, a lot longer, a lot better, so that people want to buy. I mean, if people are going to buy a car today, especially if they buy a used electric vehicle, right? And then a few years after they buy it, the battery goes out, and all of a sudden they've got to pay, the car's maybe worth, 10 grand or something. And the battery's, going to cost them 15. I mean, people aren't going to be buying used electric vehicles if that's the case. So, and they might, even hamper buying new vehicles as well. So there's a lot of things out there, right? Looks like you guys are saying battery recycling is a thing. Then why are we so worried about them going into landfills? I mean, that seems to be the big talk out there, is about how they end up in these landfills. Okay, well, good. I'm glad you see. This is why I talk to you guys. You can give me some information maybe I don't know about. I can't keep up with everything. I try. So yeah. I'll have to check that out. Lewis Winthrop III, what's up, man? Yeah, some companies are better than others in that respect. BMW intending for a very high level recyclability. Yeah, you've got to. I mean, you really do. You really do. Yeah. So anyway, guys, listen, I'm really, really far over here, so I'm going to get going. I hope you guys have an amazing weekend. Thanks a lot for being a part of this and, chatting around and kind of giving me your thoughts and asking questions and whatnot. At the end of the day, everything kind of hinging on what goes on with the Fed. I think the markets themselves are really pricing in this ultra hawkishness. So any slip up by the Fed where they don't follow through with what the market's expecting, I think gives it a good chance to rally the other way. But that doesn't necessarily mean that, that it's going to push to a new all-time high, depending on how far it's actually come down prior to that happening. So right now, you're kind of looking at March. Do they hike in March? That's the big question right now. And so coming up here, with the next FOMC, they're going to see what did the latest minutes say, and how are we doing with all that. So, that's where it's going to be, guys. I know a lot of you don't have a lot of background in all this fun economic stuff, but that really is, as I've been telling you guys for a while now, the dollar, what's going on with the dollar is what's going to ultimately be the tell for what's going on with everything else. Not that the dollar's causing it, but just that the dollar is that proxy for risk on, risk off in general. And so you can see, risk on, risk off kind of materializing through the value of the dollar. As things go risk off, the dollar gains value. The dollar gains value, causes more people to jump into it because they have debt they have to pay in U.S. dollars, that, U.S. debt that's required to be paid in U.S. dollars and doing that. As far as Biden and his thing goes, at the end of the day, it's nothing different than what we've been expecting, regulation. The best part about it is that they will probably come up with a single agency to oversee crypto. So it'd be no more of this, do I listen to CD, do I listen to commodities? Do I listen to the Securities Commission? Do I listen to whatever's going on? Biden's telling Congress that he'd love for them to get in there and clarify crypto. I would love that as well. Preferably something better than what the IRS is saying right now. And if Congress comes in and does clarify and says, listen, a crypto is this, the IRS can't make up its own decision what's going to do. Then it has to follow what Congress says. Until then, when it comes to taxes, IRS gets to say what it wants to say because that's what the agencies are tasked with under the Constitution. Right? The Constitution allows the government to create agencies and gives them the ability to set their laws, regulations, right? But when Congress steps up and actually passes something, then we got it. Right now, the deal with Congress is them yahoos in Congress can't get their heads out of their rear ends. They're both, they're fighting over it. Some of them want less regulation in crypto. Some want more. Some want to regulate it one way. Some want to regulate it another way. And that's why Congress hasn't actually gotten to do anything. I'm going to be honest with you. This is the one area where I would love for Congress to step up and say, listen, here it is. Because for the rest of us in here in the U.S. trading, we don't have to worry about anymore. We know exactly what's going on and what we have to do. And you know what? It may suck, but it sucks right now. And there's not a lot of clarity right now. So, as far as that goes, you can definitely expect the government to regulate the heck out of it. What they're going to do if they sign that executive order is it's going to give these agencies a few months to come back with the information that they need. The government, the executive branch there, is going to oversee The idea isn't that the executive branch tells them what to do. The executive branch is going to be like that intermediary, because what they want it to do is they want whatever we do here to plug in with what's going on internationally. So it makes it easy to implement, the regulations and whatnot. So, that's a lot of it I think is going to come based on what's going on with those internationally, with what's going on there, as far as what the regulations are going to be here at home. As far as national security goes, again, if you think about it, cross-border payments, the ability. I mean, Putin said it here with crypto over there. Fearful of cryptocurrencies decreasing the ability of the country there, the sovereign, the central bank there, to manage the sovereign currency. Because again, as I said at the beginning, guys, governments need to have control over the money and what's going on, and a lot of stuff here that you don't want them to have control over. Otherwise, they can't function. And you say, oh yeah, that's great. Well, yeah, it's all great until you don't have your Starbucks on the corner or something, right? Or your Starbucks goes up to, I don't know, what is it? It's $300 a cup right now, right? So it goes up to $1,000 a cup. I don't know. I'm just kidding. I'm not a Starbucks drinker. But, so yeah, cross-border payments, remittances, when you think about terrorism, stuff like that, all these things. When you think about the U.S., this is something I've been mentioning for years now. When you think about countries like North Korea, which are hit with economic sanctions, right? Cryptocurrencies allow them to circumvent that because you can't track them really, you can't follow through with them, right? So they can still continue to do what they need, get the money, so that they can do what they want to do. So geopolitically, the country that's trying to impose those sanctions doesn't have much weight to throw around. And it doesn't matter how you feel about it. The fact is, it can't be done. And if that government's there, they're going to seek to make sure that they can do it, right? So that's kind of where we're doing there. I didn't mean to get on there so much. Yeah, that's what it's all about. They can't regulate, Bitcoin itself, but they can regulate the people. Yeah, that's what it's all about. And then you use your on-ramps and off-ramps as your middlemen, same thing we talked about. Again, with Coinbase going to court against the IRS there a few years back, and then the court said, listen, you can only get this type of information up, and only if they've had this much money run through them, and only for those years or whatever, so. But yeah, it's that's how they do it, guys. They can't police cryptos themselves, but they can police the people. And even though they can't do the people individually, they could do it via the on-ramps and off-ramps. And trust me, these companies will pay attention because they want to be able to do their business. Otherwise, they can't be in business. So, yeah. There you go, guys. So anyway, listen, I'm going to get out of here again. I didn't mean to run on that much, but I wanted to touch on those things we'd been talking about there. So, as always, guys, just remember, the only thing you control in the market is how much you lose. That's it. So I keep telling you, I don't know how many of y'all have taken this seriously, but risk management is where you make your money. It is the most important thing you do every day in and out, every day in and out as you're trading. So it should be given your most attention. Not all this, how do I count Elliott waves or whatever, because you can get all that, but if you don't understand risk management properly, you're still going to lose money because there's no guarantees with what the market's going to do, right? So hopefully you guys got that. Hey, listen, we'd love to have you all. howtotradetowin.com is how you can get in with us over there on Discord. But if not, I'll be back on Tuesday, 11 a.m. Central Standard Time, and hopefully I'll see y'all then, all right? You guys have a great weekend. Take care. And if you're in Discord, I'll see you guys over there in a bit. Thanks, everyone.